right, for more on where the dollar could be headed next, BK Asset Management's Kathy Lien joins us now. She's the managing director of FX Strategy. Kathy, great to speak with you. We've been talking about a lot of the factors pushing the dollar the direction it's going, and I'm wondering what you think is the strongest force behind the dollar going forward.
Well, I think a lot of the points that were just made were very, very valid. But I think the greatest factor driving the dollar right now is really, the movements in the bond market as well as general risk appetite. We've seen the VIX reach its highest level this year. I think that that's a sign of anxiety in the markets. What's really interesting is that stocks are not responding the same way because even though, we're seeing heightened volatility, it seems like equity traders are still cautiously optimistic that a lot of the concerns that are posed by the tariffs are not going to be as severe. I'm certainly not in that camp. I'm worried about it. And so I think it's a factor that, while is driving the U.S. dollar right now, and it's going to continue to be a main driver of U.S. dollar flows.
So right now, this growth scare, that's the predominant force in your view, Kathy. And in your view, I know that you're partial, obviously, to the FX market, but, do you believe what the bond market, what the FX market is telling us versus the equity market? It sounds like you're skeptical. You don't know why the equity market's doing what it's doing.
I do. And I think it's really hard to imagine that, the warnings that we're getting from the corporate sector, talking about having to raise prices, talking about implementing layoffs, talking about a weaker growth season is not going to manifest itself in the stock market. I think that, stocks are due for a more significant correction. I think we've lost our opportunity to buy puts cheaply. I think that a lot of people are looking to buy protection these days. I think there's a lot of reasons why stocks could see a more significant correction. And for my world in FX, that means risk aversion. So while we are seeing the euro, rally significantly today, the Australian dollar, Canadian dollar, many of the major currencies up against the greenback, I still think that there's a significant risk of correction in the markets that will lead to a correction in currencies.
Kathy, is there a level in dollar yen where you get concerned in so much as what we saw last summer and the effect that it had on our markets here?
Well, last summer we did have, a significant weakness, significant moves in dollar yen. I think in terms of dollar yen itself, the Bank of Japan is really watching the 140 level. I think, they haven't really come in any degree size. They are also watching to see the ramifications of the tariffs, which is why they've been kind of very cagey on when the next interest rate hike will happen. So there's a lot of things at play here, but we do see momentum in Japan's economy, which should justify strength in the Japanese yen and further interest rate hikes. But the tariff is a huge uncertainty for everyone in the region, even if Japan's not targeted right now. And I think they're kind of in wait-and-see mode.
Kathy, it's Tim. I guess I think this move, and my question to you, isn't this move all about dollar-euro? That's 60% of the Dixie. What we've had across Europe over the last couple of days and the news out of Germany, not only historic is the word we're using here, but this is a case where you've had a major reassessment. Remember, the euro was possibly overshooting to the downside around the new year. So let's put this in perspective. How much of this do you think is tariffs? How much do you think of this is just all about Europe?
Well, today it's certainly all about Europe because today, as you said earlier, with that huge fiscal spending package that was announced. So today, this move is certainly about Europe. But I don't think that if we look forward, that's just going to be about Europe. I think there's still going to be a central focus on the dollar. This move could be erased if Trump kind of provides details on when the timing of the European Union tariffs are going to happen. So there's a lot of volatility that can happen, a lot of back and forth in the euro. I don't think that the pure stimulus package that we've gotten from Germany is the only thing that investors should be focusing on.
Does safe haven status save the dollar from a significant slide, or does that not kick in this time?
So that's really interesting that you say that, Melissa, because I heard the earlier segment, and a lot of your other guests do not believe that the dollar is going to retain a safe haven status. I beg to differ. I think that we're going to see, more of a safe haven bid in the greenback. I think, we haven't seen the correction yet, but I think we will. And when we will, it'll be hard for those currencies to avoid selling off as well.